Alright guys online, welcome back. We'll do this afternoon, we'll have a quick look at Bank of England. We'll have a look at how everyone traded it, where your opportunities were on it, what types of opportunities were available as well. So this was the screen dump, and the difficulty with this was unless you had this full screened, which I didn't because I didn't want to take up all my screen, you missed out this bottom bit which shot off the bottom. The policy will need to be tightened somewhat earlier and to somewhat more than expected in November, and that was the real key thing. There was somewhat more than November. So not only was it perhaps one of the more hawkish expectations, they then added an extra bit to it. In terms of other trades, you did get 9-0 on rates, and no one expecting any kind of hike in rates at this meeting, and that was really about it. 9-0 on corporate bonds and gilt purchases, as we expected. Now what we did also get is inflation dropped in each instance. Now this wasn't something, as I say, that we were really focusing on, so not something that I was going to get too caught up in sort of trading off, but I think was perhaps a reason why you didn't get the pound going straight up straight away. You got a slightly slower move, and that I think was because of those slightly lower inflation forecasts. Overall slack in economy is very small, so again another slightly hawkish take on the report. Other than that, not a great deal else really to take from it. They didn't mention inflation. All they really spoke about was the somewhat tightened somewhat faster than market participants expect. So that was their guidance, really, basically saying the market's wrong on its 50-50 for May. In fact, it's now moved up and this pricing is 70% chance for May. So it does seem that May's not going to be the one, I don't think. I'm still not convinced that they would actually hike in May, but we're certainly moving in that direction, and it certainly looks like we could well have more rate hikes coming sooner than we perhaps expected. Carney got questioned on this in the Q&A, and this is very typical of Carney, that he will not give anything away on this. He doesn't tell you what exactly he means. They've sort of pressed him again and again on what exactly is somewhat more and somewhat earlier, and he wouldn't say. He basically just said that rate hikes could be faster and could be sooner. No, sorry, he said they could be sooner, not necessarily faster, which is, to me, a little bit of an oxymoron. So that was really the only take from it. As I say, the big difficulty, or the bit that I missed out on, and I will be noting this down for next time, and this is what I do after every central bank. I will go back through what happened, down to the little technical elements like how all this came out. So I'm going to know next time I need to make sure my Reuters is full screen, so that I don't run the risk of the key bit of information running off the bottom of the screen, because that was your big opportunity. There was a great chance in that.
So I think as a highlight, expected could be a good highlight, because expected.
If the economy grows as expected,
before the events today, that could be a good highlight.
What would you? Is in to act on it, or just to?
Yeah, because it's something about the expectations, or market expectation of the previous meetings, previous policy minutes expectation. So that would be something to focus that attention on. In this case, we would get this tightened. Area.
I think the thing is, if this comes up in red, you know what to do anyway. You don't need to be told to watch it, because you just see the colours and you go for it. I'll be honest, first thing I did is this line just here, about unanimously, that for me, I thought, well, that means 9-0. You can buy FTSE on this, because there was a small expectation of perhaps a 7-2. So I thought, this is a dovish development, buy the FTSE on it. Unfortunately then, and this is where you note the times, it was 3 seconds later that all the rest of this came down and shot off the bottom of my screen. So I bought it, FTSE didn't move, and well, that's one of the first things for me. If you take a trade on an event and it doesn't put you straight on side, you've got to start wondering, am I right in this? You've got to very quickly start thinking to yourself, I'm possibly and probably wrong here. So I got out of that very, very quick. I was not going to be sitting in that for too long, just because of the fact that it should have put me at least, say, 5 ticks on side. Then you can decide what you want to do with it. I'll get a replay up in a minute of the pound and how that reacted. In fact, bring that up now before we go and have a look at the charts afterwards. Let's get this replay up. I should have had this up slightly earlier, but I was watching the Bund on that little breakdown. Right, here we go. Right, let's get a pound chart up. 6B. Come on, the pound. Right. Okie doke. Right, just wait for this to load up, and hopefully we'll be able to have a little look. Did anyone happen to record it by any chance? This doesn't seem to want to give me the chart. Okay, right, there we go. It's just playing around with me. Right, I'll make this look a little bit more TT-like. Next one of these big events, I'll record my screen so we can actually have a little bit of a better look at it. Right, so that was pound. Let it play for a sec. And I think the thing was, when you got that 9-0, that's why you get this little spike down just here. So you got 10 seconds to go. It gets very, 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 very thin. And you see that really quick drop. No, not just yet. Now you get a very quick drop down. That was on the 9-0. And then if you'd read the rest of it, you got that really fast jump up towards 30s, and then it exploded. And that's where that opportunity was, that because of the 9-0, you did get that first initial chance to get out. And then what you get from there is first move ups 04s, 05s, and then you've got that level up at 15s. Now, as you've seen in the past, you start then getting the liquidity comes back in, it gets a little bit thicker, and now it gets a little bit more tradable. So watch it down here towards 72.3, because you've got this little dip of volume down here. I'll be watching out for that. As you said beforehand, those 15s were a target. I mentioned it on the the live stream earlier on. But I think that
I mean, it's
Go on.
yesterday's high, right? Or anything, any other reason?
the 15s,
14 is high as of yesterday.
yeah, I think that was pretty much it. In terms of why exactly. Yeah, it's those two highs. You'd also got a couple of lows. You can see where it holds. Yeah, it spiked just above it, and you've got that high there. So for me, because it's a level that was a bit of support and then became a bit of resistance before this drop down. Also, taking into account of how far we will have moved. That was around about 100, 120 tick move. I always think that that's probably about the limit of what you're going to get. So yeah, you got that real quick move up, and that was all about, if you did manage to see that somewhat greater extent comment, let you in really nicely there. And then you get up to those 15s, and this is where levels do matter. 04s was that very first little spike up, so that was the first point we reached up to. And then it pushes on up to 15s. Gets very, very sticky up here. And then you're up to, we'll watch it when it first gets there. First hits 15s, and that's what I'm now watching for. I want to sell this, but I'm not just going to sell it straight off, because this could just punch through 15 and just go straight up. The fact that we've now sort of traded 300 up there, we're still not managing to push on any more, starting to struggle. That's where I'm now sort of willing to have an offer around 13s, 14s, 15s. In fact, I was a bit too slow there. But the point, what you're looking for is you're looking for it to slow down, and yeah, it pushed through, but then you're looking, as soon as it pushes through, for it to drop straight back down. It starts doing that, and then as it drops down, it then starts failing to even get above it. That's when you can start having a go at selling it. Now, as it happened, there you go, push up towards 16, 17 again, and that's where the size was done. So if you are taking this trade on, and you're short 13s, 14s, put your stop above the high. You don't need a particularly tight stop. A particularly large stop. You know that if it breaks that high now, it's likely to continue on. First areas you're looking for, you can see that little dip of volume. Whoops. And that was the point that we first, excuse me, reached on that very, very first bit of the move. So that's the area to be looking back to start with. What I was looking for when I had sold this is I was looking for it to drop through and continue a little bit lower. You start getting the sense after a while that you sit there and it just will not come down. There's no real selling when it gets down there, and that's quite a good indication that perhaps this is not going to be the one that's going to break down. So you get really virtually no selling when it gets back down there. And that was the point that I really started to give up. In fact, we tested back up once again, come back off, and you see it just totally runs out of energy. And when you start seeing that, and it gets down here once again, runs out, no more selling, and I then sort of started to give up on it. Perhaps a little bit prematurely. As it turned out, it wasn't. But you know, if you're looking to really play that, you do need to sort of try and hold on to something. But for me, it needed to get back through there reasonably quickly. If it didn't do that, then I wasn't going to be willing to hold on to it. You then push on and we start making new highs. How did everyone trade it?
Beginning badly, ending better.
Badly?
At the beginning.
Yeah? What do you think your mistakes were, or where do you think it went wrong? That's the bit that you really learn from.
Yeah, just execution, I think, mainly. I tried to short pretty much the spike because again we hadn't seen that sticky or whatever it's called.
Oh,
it was just
yeah.
9-0 and it was pretty like hawkish, and there was a bit of commentary, but I thought maybe the move was a bit overdone. So I was trying to sort of go short.
Where did you
Around
end
that
up?
first minute spike. 84s.
84s.
I think. Hang on, I'll get my chart.
So somewhere around about there.
Yeah, maybe a bit higher.
Yeah, let's say 86 is just there. So
84.
My first short, I was trying to short at 88,
88, yeah.
and I got stopped at 96. And I tried to go short again, and stopped. And then started getting back into, let it get back into the range, and then started going long.
Fair enough. At least you flipped it over though to start going long.
Yeah.
So what people can often get caught up in is once the move's done, if you're not in on it somewhere, it's then so easy to just get caught selling it, thinking it's gone too far, this isn't enough of a reason to keep going, etc., etc. And you start finding reasons not to actually think, right, is there a long in this? Is there a bit more time I can take about it? Oops, don't know what happened there. Yeah, it was a tough short. I know it's easy to do the short because of the fact that first jump, once you got up to around about 60, that was then the hard bit to buy. I think that's where you've really got to, if you're going to go for it, you got to say, right, I'm going to buy it when it's thin around 60s, buy it whilst it's still moving quickly, and then get out once it spikes up. You're never going to get the high. So that first jump up towards 04s, you're more likely, if you bought 60s, you're going to have to get out around 90. It would spike up, whip back, and that's probably your clue to get out. So yeah, I don't think you did too badly in selling it up there. I think. How long after the first move do you reckon you sold it?
It was in the first minute.
Yeah. As in
20 seconds in, maybe.
So are you selling it as it was still rising?
No, it had done the spike. It had come down again and came back up.
Oh right.
And then it was like, we'll try and short it there. And then I was on the side for 2 seconds, and then it was.
Yeah.
And then but then it hung around there for a bit, trying to figure out what it was going to do.
I think you're right to at least give it a chance to calm down.
Yeah.
The most dangerous thing you can do is sell it against the move.
Yeah.
Just because, say, you've got a level or whatever reason, you're like, right, that's it, I'm going to sell it. So yeah, let it do it, sort of calm down a little bit, and then have a go at selling it. For me, generally, I will try and stay away from going against the move in the first minute, really, just because of the fact that the only way you're ever really going to be able to go against the move is if you get in on that final spike up, that real fast flurry. And really the only way to get in on that is to have an offer. Danger then is you have your offer too early and you're then trading up here and it never actually gets back to you. So that's the danger of it. In terms of opportunity, the fact that it did do that flick down, I thought it did give you a really good chance. It's a shame we can't get a FTSE on the replay because the FTSE was so much slower. I bought it, and like I was saying a minute ago, I bought it and took a 3-tick loser because it didn't go. But had I seen the rest of the Reuters, you could have got short there very, very easily. FTSE did not go as much as I expected. If I bring a chart up for you, Bunn's going there. Bring a chart up for the FTSE for you, and that was what happened. You ended up with this tiny little spike up. So I bought the 61s, didn't go, went offside quickly and got out, I think, at 57s. So, sorry, 4 ticks loss. So got out very quick. And then we dropped about 20 ticks, which, to be honest, I thought the FTSE would have gone quite a bit more than that, just based on the level of volatility within the market. dropped down to the bottom of a range down at 35s, and then we started to turn back. The nice bit about this trade in the FTSE was it gave you a couple of chances to sell the retest of that low. Really nice, easy trade as well. You see it run back up. You could even put an offer in on that, because I don't mind so much the putting orders in if you're going with the move. So on the pullback, if you've got a nice clear point to get in at, then I'd be happy to have an offer up there, sell it. For me, on anything like that, the target is the current low. I don't go any further than that. I don't go sort of thinking this is going to be one where it's going to continue and continue and continue, because the fact you can have much greater confidence in running it back to the next low, and much greater confidence that that is likely to at least reach there. The continuation of the move is the point where you're then questioning whether it's going to go. You know there's a likelihood that people are going to buy it here, because the fact that they've perhaps also done the same trade as you, sold it on the pullback, they then buy it as it goes through the low. So you then need to see extra selling that's actually going to drop it through the low. So for me, I would sell 51, get out 42. I'll often have a bid pretty much on the low price just to get out there to make sure you're getting out. Got a question. Got that for fun. Yeah, many errors when start bidding. This XP. Try to cash in 15 ticks, as you said. Okay, so we'll come and let us know where you got in, Peter, and where you got out of it, and we'll have a look at what you did in a minute. So yeah, that was that for the FTSE. Really, really muted. Much less interesting than I expected. So I think cable was the place to be. That was the place with all the action in it. Bund, by the way, has just dropped all the way down to 45s, like I thought it might, frustratingly. Anyone else do anything useful on it? Or actually, did anyone else play this flag break? You did, didn't you, Ollie? That works out quite nicely. The only thing to take from that was just the difficulty with which it took to go up. Yeah. And what I thought was quite strange about that was, as this was going up, the euro was going up at the same time. And for me, I thought, well, if the euro's going up against the dollar, you've not got the sort of dollar strength holding anything back. So why should the pound struggle? And that was quite a confusing one. But yeah, you saw it all the way up this, for those of you who were long on that. Just every single price just got sold back into, sold back into, sold back into. It made it really, really difficult to hold on. The one thing that kept you in, which again was another one from Ollie, was this trend line. And that allowed you at least to trail a stop, as well as it also followed this 20 period moving average. That I use as another indicator to sort of stay in a trade. Unfortunately, I talked myself out of it based on the price action, the fact that it kept getting sold, and I was like, I don't really want to try and hold on to this because it just keeps getting sold. The flip side of that is when you do see that type of price action where it keeps getting sold but progressively gets higher, at some point the selling will just have to give in, and you do get a sort of additional surge higher. You never really got it. We got it a couple of times. Whenever you got this little pullback, you then did get a bit of a surge, and you got a pullback and a surge.
It was a nice 3-minute candles down, and then you'd get a good punch above it, and it's
so that always seemed to be it would go up a bit, it would then start to really struggle. The selling would come back in, push it back down, often with a fair bit of pace, and that was the point where it then just started to rise back through it. So take a note of that, keep that, when you're doing a debrief on these type of events, keep a note of how that price action worked, because if you see that in the future, you're going to know, say to yourself, right, I'm going to sit in this, but I'm not going to buy highs. So if you tried to buy a breakout in that situation, it just didn't pay you. As soon as you bought it, you got 2 ticks, and then selling came back in, and almost every time put you offside, which then made this whole move very, very difficult to stay on. Whereas if you recognise that, you'd wait for the pullback, as it did that quick flurry down, buy it then, and then wait for it to drift back up. And it's not quite such a nice trade, because you get the quick move against you to buy it, and then it doesn't put you back on side anywhere near as quick as it sort of gave you the opportunity to get in. But yeah, nice one on staying. You stayed in on that, didn't you? You just sat it.
I got out about 40, and then re-entered again when it came back down to the trend line, and then held that to 150.
Oh right, so sort of
About there.
you
yeah.
got out somewhere up here and then got back in down here.
Yeah, and then held it to 150.
That's good. That was nice. That's why I didn't do very well. I bought it up here, so got out. Don't think I bought the pullback. I bought the break here, and then sort of got out a bit. I did sort of keep trying to buy it just here, but yeah, I found I was consistently getting out of it rather than sitting in it, and that was mostly because I was expecting this to go reasonably quick straight up, and when it wouldn't, I kept talking myself out of it a little bit. So that's my own fault really for not sort of pushing the trade, and part of that was because I didn't get on that first move. I didn't want to then try and like push a trade when really it was all there to be taken. So you keep looking over that bund, it's just going. Down at 38s, 39s. Again, if it is these...
You in that?
I was I'm out now, but
Yeah, no.
I wasn't convinced by the the market behavior when it was going through the level.
Right.
62 is the daily low
Yeah.
of the big candle of the big
Monday.
yeah.
Yeah, it was the previous day's low, wasn't it?
Yeah, and it bounced off it the first time, and there was no sort of real intent to sell. And
No, it did
there
that.
still isn't, and that's what made this trade really tricky.
Yeah, the really horrible bounce, didn't it?
Yeah.
Yeah, the one thing that Bund has done very nicely, since then was this little setup is something I really like, whereby you break the level down here, so that drops us down towards 57s, then consolidates and creates this little low. So you get the two little lows down at 59, and it's the break of this low that I find is often a good sell to get that continuation move. So it gets you in rather than you having to sell the low, which has rarely paid you, bounce, 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 bounce. Rather than sell the low, you get in just before it, after it's sort of built a little bit of structure. Gets you in. If you then want to sell the low, you can, to sort of pyramid that trade. And also, what you've got as well, you've got the bonus that this low is already through that previous low at 62. So it's already saying that you're in the right place if it breaks that low, because you're already through 62s. And yeah, now we're down at 40. So yeah, like I say, I don't think there's too much left in this bund really. If you have a look on a daily, 11s I think is the next area I've got. 11s then down towards I think 95 or 92.
Yeah,
And that
in my notes today before we started, I thought that 62s was the last level.
right.
Don't have any other level below.
Well, no, that 11 comes from like beginning of the year, or in fact it's the lows of last year. So yeah, if it is bond yields that are pushing these equities down, maybe we're on for another leg. Right. You got a bit stuck on this one, didn't you, Tom, in terms of trading it?
Yeah, I did a bit of a cock up there.
Right.
Execution. So I wanted to buy 13 seconds into it.
Yeah.
61s, and I sold. So then,
So you ended up accidentally selling it here.
yeah. So then I sold 91s. The reason why I sold 91s was that at this point in time, I was already getting not really convinced by the move of the market. I
Yeah.
just did not get the vibe or the feeling that it's really strong, probably it's going to continue.
Okay.
And then I sold 411s.
All right. So you waited quite a bit then.
Yeah. And then I closed all of them at the candle that starts your trend. So at the,
Down here?
Yeah, yeah.
Wow.
Nice.
Yeah, so I just closed all of them and started laughing at myself. It's just, it was I mean, you know, it would be a good sort of trade, I think, if I hit the right button
Well,
to begin with.
yeah. Looking at it now, it seems like quite a good trade. But the problem with it is you've got it wrong, and then just decided to keep selling to hopefully save yourself. And what would you have done if this had come back to here and then gone like that?
I was watching this all the time, obviously, and just trying to see if there is any sort of real kind of interest. And I just didn't see it. This is why I kept it. As soon as I saw some strength, I would just cut. And then, as we had the discussion, you know, previously, of course, if it was my real account, I would just cut it straight away.
So if it was your real account, you sold 60s.
I would cut it at 90s, but I
Yeah.
would sort of notice it straight away. I wouldn't call it. Well, it's just way too much risk. So only because it's kind of seen, I decided to kind of play with it. No.
Yeah, I think that was the right thing to do, really, to give up on it quickly. Yeah, if you end up averaging it, particularly if you're going to wait some time as well, the longer it sits up here, you're building the possibility of it doing this kind of thing, and rather than this very slow move that actually gave you a chance to get out.
I see it was obviously, extremely risky on my part.
Yeah.
I wouldn't have done it normally. Trust me, that would be cut straight away. But as I'm saying, since some entry by mistake, I decided I would have played with it, but nothing else.
Yeah, fair enough. But yeah, I'd take from that well, don't make the. How did you make the mistake of selling it?
Oh, that's a very good question.
Just.
It's in the heat of the moment. I mean, I think that I wanted to get in really quickly and just.
So you just clicked one side or the other. Just just click.
At this point in time, I cannot give you the explanation how it happened, but it happened. So that's just a learning for the future that I need to. somehow,
Yeah, I'd say so. Yeah.
resolve it.
Be. I think with central bank things, events like that, be very, very clear on what you're going to trade, because if you don't have a clear-cut idea of exactly what you're going to trade, it's so easy to do that kind of thing. To just go, I don't know, but it's gone up, so I might as well sell it. Because
That wasn't it. I knew I wanted to buy it. I think I just clicked it.
it just went the wrong way. Fair enough. What made you want to buy it?
I think the initial move.
So it's the fact it went up. Okay. Can often be a slightly dangerous reason to buy it, just in case it does. This is quite small, this move here, but there's been ones in the past where it's gone 50 ticks one way and then reversed it and done basically this move with a 50 tick tail down there. And that, if you go with it's gone down, you will manage to sell it, and you'll sell it around here, and then as soon as it turns, the moment it gets back through that original price, it just accelerates, and the move is just like this move. So you end up not just taking a 50 tick loss, you'll end up taking a full 100 as well. So yeah, be very aware of.
Lots of learning here.
Yeah, well, that is the whole point. That's why we're it's good to go back over it and hear what people actually did and where people feel they did the right thing or the wrong thing.
I never sort of took part in events or played events. So for me, it was sort of proper sort of first time. So don't take it sort of too seriously yet.
Yeah.
It was just the experience at this point in time.
No, fair enough. That's the big thing with events. A lot of it is experience. The hard thing with event type trading is you can only get experience by trading it, but you only get that experience by exposing yourself to quite a large risk, because it's always a high risk type of trade. So yeah, good to make the most of it early on.
Very long time to commit real money to that kind of event. I can see the
Well,
potential in it.
There's a huge amount of potential in it, and I think all that potential boils down to is just being very well planned for it. If you go into it thinking, I'm just going to have a go at whatever happens, I think you're always going to put yourself in quite a lot of trouble. Just because it moves too quick to genuinely read what's going on. And so therefore you end up influenced by what the market does to start with. So you either end up buying it because it's gone up, selling it because it's gone down, and you're not actually acting off what the information is. So the main thing is to focus on the information, the planning, exactly what you're going to do. I know some of the other guys, I think it's a very, very good tip. If you did manage to get in on this, if you saw the 9-0, saw it dip, and then saw the other comment, if you were able to get in quite quick, often the best thing to do is watch the chart for a moment. So we'll have the first minute, because first minute will usually close somewhere near the top. Just step back, watch the chart, and just go, right, I'm going to watch the chart for 1 minute, then I'll trade. Because that first minute has so little actual trade in it and liquidity that you can make any sense of. You're as well to just step back and just watch how the candle moves, and then you could almost watch the clock and say, right, that's a minute, I'm going to get out or I'm not. Gives you a chance to sort of reassess why exactly you're in that trade as well. So yeah, caught you out a little bit, it seems.
Big time.
How did you get on, Victor?
Well, a few trades.
Yeah.
So the first one I got in long 13 39.83s.
39.82. All right, so you bought it up here.
Yeah, and that was basically momentum play.
Nice.
So I took this one, and then I got short. One 40.90s, and the reason was that unfortunately I didn't hold it for long enough, but
what, up here?
Yeah, the reason was that I had a line at 40.20s, and that was the low volume on Monday, Tuesday, Wednesday.
Okay.
So I was observing this level, and then on 1 minute, this is 1 minute, right? We closed, we printed this selling tail, like a very, very long selling tail.
Yeah, this one.
Below that level. Yeah, this one. And we closed below that level 40.20s.
Mm-hmm.
So I got short there, but I didn't hold it long enough.
No.
Then I took a lot of small losers, and then there was this push, the blip down. And I think Richard, you said something that this is a good opportunity to buy on this climax sell.
Yeah,
On
that
this-
was the
on
one
this-
down there. It was down towards
So-
60s.
Yeah. So bought there
That-
too, but also didn't hold.
That was a real shame because I said I got that level at 60 to 57 and that low was 63, I think.
Yeah, I had an order in at 62.
Yeah,
Didn't catch it.
yeah, I had a bid down there as well. I thought this is the ideal place, and it was that little flush was
Climax.
yeah
Some climax.
real strong indication that
But then I took a lot of small losers and anyway, it's overall it was a small negative.
small negative.
Because I didn't hold good trades. I mean, like this big selling tail.
Yeah,
Right now, I know I should be holding it longer, right? The
Yeah, I
buying
think-
there as well.
I think really when you're selling that, you should be looking towards that. Well, sorry, when you sold that, you'd be looking towards that little low there. If you had those 05s, that was the first
Yeah.
top here, and it was the point that we held on the way back just down here.
Yeah, actually, I have it. That's a daily pivot level on my chart. My
What,
daily
on
pivot.
05?
Yeah, 04 actually. I have.
Oh, really?
It was some daily pivot.
Oh, right.
So
Fair
that, yeah. Yeah,
Yeah, I
I
had
think that
15s.
for me the big lesson is that first of all I probably should be more patient when I take the trade, and then I should be more patient when I actually win a trade.
Yeah, I think it's the in the
So I
trade bit
yeah.
that makes a big difference. I'm going to admit that's probably my biggest failing, that I don't have too much patience when I'm in the trade. Like I was saying, all up this move, I ended up getting in and out and in and out and in and out. And what you end up doing is you end up creating more risk for yourself because you've got to be right more times when you get in. Whereas if you get in
Yeah.
on the break here and stay with it, you're taking one risk on down to there, which is probably going to be about 5-6 ticks, and that's it. Whereas if you're trying to continually get in and get in and get in, you could easily take 3 tick losers, and actually you've taken on much more risk than your 6 tick stop down there. And that's the right trade to be in. The rest of them are all trades that you're trying to make something happen. So yeah, hold on to these trades, because also when the market has got that much more energy in it, when it's got more volume and more volatility, it will go to target and it will go there quicker. You know, on another day it would take a long time for it. So I know it's difficult because of the fact that you feel like it has got so much more energy, it's doing so much more, that you don't want to be sort of exposing yourself to the risk as much. But one, you're exposing yourself to the risk. Two, it will get to targets a lot quicker. So yeah, and I thought that was a really good trade.
Yeah, and then I took. Now I remember. I took one bigger loss because of the freeze on TT. So I was short. I was short 2 contracts somewhere, and then it was basically stopped working.
I wouldn't count that as a loss. That's an unfortunate situation.
No, but it can happen in real trading as well, right? So
Sorry?
It could happen in real trading as well.
It could, yeah, but I think it's more likely to happen more frequently on the sim.
Yeah, but.
Yeah, that's just unlucky. I think really more.
But then the orders, they're on the servers or they're on the desktop, on the real
Your orders should be,
on the exchange.
yeah, or certainly at your clearer. So yeah, no, it's more likely your clearer because you can phone the clearer up and get them to pull your orders for you.
Because it's really fun. Some software like NinjaTrader, for example, which is kind of popular.
Yeah.
The order is on the actual desktop, on your desktop,
Really?
client desktop. So if the computer goes down or something happens, the order is like, if you have a stop, for example,
Yeah.
it will not get executed.
But does that mean then that your orders are executed slower? Because
Yeah, as well,
yeah,
definitely.
because it's got to wait to trigger it on your desktop and then send it to the exchange. And if your computer's processing speed's not quite fast enough,
Yeah.
that will give you that little lag, and that's where your stop will then also what it then means is that your stop, if you have a stop in, will always be the last stop to be triggered, because you're effectively joining the back of the queue whenever that situation arises. So yeah.
And where did you go in at 81's, your first trade?
Which one?
81's, the first one.
The first momentum play, basically. So there was like a small pullback in this. There's strong push at the very beginning. It was like a basically momentum play.
Fair enough. Yeah, I don't think there's anything wrong with the momentum play if you've got the info right on it. I know Peter asked a question about how could you predict the one that I was saying as an example where it goes 50 down and then straight back up. That's purely on the case of, often it will happen if a market's near quite a big level and you get something that would sway people's judgment one way or another. So give a little example, if we did go and have a look at the pound, if say we were trading just around here, say 80s, well actually let's just say we're trading 70s, near these lows, and that 9-0 vote came out, that could have been enough to push us straight through that level, and there's not going to be many people with any bids in the market. So context makes a big difference here. If it's set up to do it, and say you got a 9-0, then likelihood is we would have shot through that level, and then the comment about the somewhat greater extent would have brought us straight the way back up. So excuse me, that's where you end up with that situation, and it's not entirely predictable, but what you've got to take from these things is the right trade to do there was to sell the 9-0. I do still think that was the right trade. Just because you lost on it and it doesn't look like a great trade selling it down here, it was the right trade to have a go at to start with. The rest of the information proved that it was not going to be a winning trade, but it was the right trade to go for. Like I say, that was the trade I went for in the FTSE. All you've got to do then is be aware of the next piece and the next piece of information as it comes down. Came down, and that told you that if you had sold it, you should have been taking your loss and buying it very, very quickly, or alternatively cutting and reversing if you were on a winner. So it's not predictable necessarily that you're going to get 50 ticks one way or another, but you can expect that if a certain scenario plays out with the market in a certain position, you're more likely to get a larger move. Because you're very mid-range, to get such a large move you actually had to have some reasonably game-changing information, which is what we got. So that's why we got such a strong move. Anyone else do anything else that they kind of want to talk through? What we'll do, I'll bring that ladder back up. Oh, there we go. We're now on this 39 minutes in, so on the chart we are just about it's someone's birthday. Yeah, so we're getting back up into this area now. So that took a long, long time for this to break. What I'll try and do, I'll squeeze it forward a bit. I'll certainly speed it up a little bit. We'll be able to have a look at that. So that price action, that continuous selling as we actually broke. So I think something worth This is sped up at the moment, so it looks quite a bit more exciting than perhaps it was. I do think anything sped up though can become a lot more readable. That's why I think faster markets are more readable. So you start to sort of get the sense of where it's holding, where it's not. So moving through this a little bit quicker. That I think is a good way. If you go back and replay something, have a look at it on double time or triple time, so you get a quicker sense of where the market holds certain things, how it actually does the holding of certain areas as well, just so that when you do get a faster paced move, you're a little bit more comfortable with the way it trades. It's a very helpful way of looking at things. We are still a few minutes away from that break. Anyone got any thoughts on what we're going to get for the rest of the day then in the pound?
So I have an idea for a target today or tomorrow.
Oh, yeah.
We spoke about.
Yeah,
so
you're
this
looking for
measured move.
this sort of 150 ticks
Yeah.
to the upside. Where are you going from? Because for me, I would add it onto there.
From that swing low.
You go from here?
Yeah.
Okay, so that would take you up to, that was 60s, call it.
It's like
So that would take you
14,
to
10.
10, 41.10,
Yeah.
you think?
Yeah. And
Yeah,
this is
I'd-
also a single print.
Oh yeah,
from
that's
some
right.
A few days ago.
Yeah, if we go and have a look at this chart here, it comes in right on. Whoops. It's basically this low. These
Right.
couple of little lows here.
Yeah.
So you got a primary and a secondary low. You got 06s and 10s. So I think that's probably a decent call on a new high, or sorry, a new high, a point that is likely to stop at. I'd be watching out on this candle though. If we do get
we could get a pullback here.
pretty bearish looking candle there, we could end up sort of turning this back over and having a little bit of a dip.
Yeah, but then we can continue.
Yeah, I think if we do get a dip, I think you've got to look. Whoops! I keep forgetting you can't draw on these charts. Straight back towards those 15 area. I think that's going to be your main target if you do get some kind of pullback. So, yeah, where are we now? 58 still. So we're still holding above 50s. Reason for 50s is I have to make this chart a little bit wider. Where did 50s come from? 50s is this low, I believe. Yeah, there you go. You got this low. There's this little spike just before we really started to fall. So almost a bit of a liquidation candle just there. And that's why I thought 50s. 50s worked as well quite nicely. It worked very similar to those 15s where it went there, hit it, and then just started to come back off. So that's something to watch, particularly in the pound, in the way it does it, the way it sort of goes, hits the level, and then starts to trickle back away from it. So yeah, 50s could well be decent points to stop at. Right, let's see where we are on this. So we are right now just coming on to that breakout. But I think Tradeovate has lost itself, unfortunately, because we're trading here and the bids and offers are down here, which is not ideal. And that's because I sped it up and it's not enjoyed it. Yeah, it's not going to help us out there. So the reason I sped it forward is I wanted to sort of talk through that price action whereby it continually was sold on the way up. And the way that sort of can allow you to sort of try and trade it. And I think for me, what I'm going to take from that is when you do start seeing that type of action, you just got to wait for it to basically progress through each area. And it did do it. It sort of found areas that it was getting sold at, and as soon as once it managed to get through them, you would then push on, find a new area to get sold at, and then it would push on again, but it was rarely really sort of turning back significantly. Never really took out a previous, never really took out any kind of previous low. So you make a dip back, small dip back. That's the only one really when you take out that low after hitting 50s. That was the first time that you'd actually taken out one of those little dips back. So you got to be a little bit patient on it, but every time it does that pullback, you can almost then just start to edge your stop up with it if you do want to try and just sit in and try and hold on to that move. And it played out quite nicely in the end. So yeah, that was Bank of England. The one last thing just wanted to point out, something that I would usually talk about a little bit later on. We do sort of debriefs on these type of events. What I always try and list is when I look back on these events is what trades were available. So for me, you had a first trade here, which was what I would call a hit and run trade, and that's basically on the news. So the event type trade, if you got the piece of news, that was a trade to hit it and then hold on to it for a bit. You know you're going to get a big move, you know you're going to get a fast move. So that's your hit and run trade to start with. I thought it was available. Whether you took it on depends.
So quick.
Yeah.
It was 2 seconds or something. It was up at the start.
That was the thing. And unfortunately, it was the Reuters thing that came down too quick on it, or not too quick, came down too far. And I think if that hadn't gone off the bottom of the screen, I think it would have been entirely possible to get in somewhere around there. What it would do is it would give you the confidence when it was super thin in this middle bit here, so between say 30s and 60s, you wouldn't have minded just buying it there. Whereas if you're not quite sure why, and it's really thin and it sort of seems to be flying around, you're not going to be willing to buy it in the middle of that. But yeah, so you had that hit and run trade. So I'd look at that, look at how you executed it and when you got out. Often a good sign to get out is either that crescendo push into the high, or when you start seeing all the bids and offers thicken back up. So when it goes back to a slightly more normal trading, so you get back to, well, in the cable, to 20, 30 lots on every price, you start seeing that, you know that it's slowed down a little bit. That's where you can start taking your time, get yourself out of the trade. And in managing that trade, as I mentioned, a trick that a lot of people use is just watch the chart on it and wait. Next up, you've got a reversal trade on here. And that was quite a nice little reversal. You got a couple of different ways of playing it. You could have either played it straight off the level at 15s, or you could wait for Victor's reversal candle. So you got two different ways of playing that trade. You got one's a price action type reversal where you know the level, and it's then a case of watch what happens at the level and decide whether you think the level's good enough. The other reversal type trade is whereby you wait for a push through and a close back below. The second trade is probably a higher risk trade. Sorry, it's not necessarily, it's lower risk in terms of you've got confirmation in that you've got a false break. You're taking on greater risk in the fact that you're selling it there and your stop's going to have to be there. Whereas with the one at 15s, you could sell it as soon as it pushed through that little high that it made up at 18s. You were wrong, so you get out. Next up, you didn't really have this, and so it's a trade that we'll talk about in a little bit more detail later on, but what I'd call a passive continuation trade. And the idea behind a passive continuation trade is you will find a level that the market pulls back to, and you'll have an order on it. So we kind of nearly had it on that bid down there. And the idea of that trade is, rather than try and get in as the market goes your way, you're waiting for it to come back to a point where you can buy it. 60, 62, 57 was the area. Unfortunately for most of us, it didn't quite get us. And
When you say miss a fill or something like that,
Yeah.
it's like by a tick, and then it went onside about 5 ticks. So obviously the temptation there is your sort of trade idea is working,
To
but
buy
then
it
I
up
should
there.
have hit it at market, but then I sort of didn't, and then. But how
I-
do you judge those?
for me, I feel if I'm going to try and buy it there and don't get the fill, what I don't want to do is then buy it here because my stop is still down there.
Yeah.
And sometimes I think you're better off to accept that
Accept it, yeah.
you've not got the trade, and it's frustrating.
It's kind of, I think Alex was talking about the concept of risk stamina, right? So you either have, I mean, you can enter multiple times with smaller stops. So in
Yeah.
this case, if you miss it, you can, let's say, enter once again with smaller stop, or you can enter kind of once but with larger stop. So you kind of have to choose one, but don't mix two approaches, right?
Yeah, I think that's probably a good way of putting it. That yeah, if you're willing to see it drop, react, and then just go right, I'm going to buy it, then yeah, you do it that way and take on the larger risk. Personally, I prefer a little bit more accuracy in terms of my trades. So if I can't get it there, I'm going to leave it, and then I'm going to wait for something else. And the next trade after that was the breakout continuation trade, whereby you find a point that you can get in for that continuation in a different way. So two different ways of playing a continuation type trade. It's either a passive one where you wait for it, find a point and buy it, or you've got a much more aggressive breakout one. The risk with a breakout one is they're often harder to pick timing wise, in that this one wasn't too bad. Once it broke, it was quite clean and it took out these little highs. You could have had one that sort of broke, come back.
Which gave you the confidence.
Which was that?
So my trend line was slightly tighter into that wedge, and so
Oh,
that
right.
red candle before it sort of pierced my trend line, and
Oh,
sort
so
of
like
failed.
that.
And so then when it went, then I was pretty sure that if it had sort of got through it, I was going to
Yeah.
apply it. There.
Yeah, no, that's a fair point. I think, yeah, failure anywhere often makes something an even better trade. Every time you get, well, this is a great example of it. It sort of failed to push lower. It failed with that sort of crescendo of action. That's a great time for you to go the other way on trades. It gives you more confidence, even if you're not going to just buy it here. But if that's, say, a break of a little range, it gives you more confidence to buy it out of the top of that range. But yeah, the breakout continuation trade can be a little bit trickier. And it can be trickier in the sense that it's not always going to pay you out, and you have to basically, a little bit like trading on the information. If it doesn't put you on side quite quickly, for me, that's a reason that I don't want to be holding on to it. I might go for it. If it doesn't go straight away, reduce my risk a bit and then keep a little bit of the trade on, just so you get a little bit more of a sense of what's going on. You can then, if it does start keep going your way, add that trade back on, which is something that I'm not quite so good at. I'm quite bad for, say, buy it there, doesn't go, reduce risk, and then
Yeah, I did.
you struggle to add it back on, so you end up always running small size.
Yeah.
And it's something that I need to change, because what that does, it massively skews your risk, because if you get it wrong straight away, you're wrong on order size. If you don't then add back in, you're never really taking the maximum profit out of it.
Yeah. Would
So-
you be tempted to sort of carry on buying on that trend line? It was quite strong. Would you sort of?
That, yeah, I did try. I think I bought it there on that pullback. I definitely bought it on one of these two.
Like adding to a position?
That's the way you should do it.
That's how you
Yeah,
should do it.
I'm more inclined to, as it pushes up, get out
And
and
every
then
new
try
hire
and
made, I
rebuy
was
it.
taking one off, and then so yeah, as it got further and further away, like I had one contract to 50 rather than
Yeah.
the full side. You know.
That's not a bad thing to do it though. At least the one thing that you've done there, if nothing else, is prove that you can hold the trade.
Yeah.
And that's one of the hardest things. If you can hold the trade, eventually you'll learn to do it with 2 lots, with 3 lots, with 4 lots, 5 lots. If you can't hold on to the trade, it doesn't matter what size you trade, it's not going to make it any easier. So no, I think you did really well to sort of just keep hold of that, even if it's just one. And if the other way of doing it, if you did want to keep a bit more size in the trade, is you get out on each push up, buy it back on the trend, get out on each push up. It's a harder thing to do because every time you buy it, your average price chases you up the page, which can be a little bit disconcerting, particularly if it didn't do it in this instance, which was rather nice. But if, say you stayed in up here, you then buy it on the pullback and then it starts coming back down. Even if you get out of the one that you bought there, your average price has still jumped up, so it then starts looking a lot worse for you. But yeah, there's 2 ways of doing it. There's an argument for both. You either put the size on here and stay in, or you get out and back in and out and back in and out and back in. And again, it's that sort of risk type idea of what are you more comfortable with taking, small risk multiple times or one larger risk. I mean, you take the larger risk, when it works you get paid a lot better for it because you've managed to get in a lot more size at the more optimal point. If you wait and sort of do it in bits, yes, you'll have a lower risk, but the same person could trade the same number of contracts, and by the time they get there, the person who put 20 on to start with compared to the person who put 3 on and took one off, added one, took one off, added one, etc., probably going to be better off.
Way better off.
Yeah. But that all comes down to a personal willingness to take that risk on, and you've got to have quite a bit of conviction that it's going to go to take that on. But
I was also Carney's talking to only one comment, and then the move's going to break.
that's
down.
that's the other big side of the risk on it. It's mid press conference. He could at any point say something that makes it just go straight down. But equally, if you put the risk in, he could say something that makes it accelerate higher and gets you out very nicely and gives you 30, 40 ticks more than you're expecting. So you do have to kind of say to yourself, well, yeah, he is talking, but I've still got to take the risk on that sort of breakout type trade. But yeah, that trend line was excellent in terms of giving you a reason to stay in. And that's where, if you did put that bit more size on, even if you lost on the trade, if you kept your stop below the trend, you were still always going to make some money on it. So yeah, nice way of staying in the trade. Anyone got any other questions on Bank of England? I think that's probably about it. Press conference, go on.
Do you expect a hike on the next big Thursday?
The May one. At the moment, a really tricky one. I'm going to go with I still feel like no. I feel like they're going to want to stick to what they'd said previously. A little bit there would be Q3. But I think if data keeps improving, UK CPI this month I think could be very important.
This market expectation slash pricing 50-50 in May, how it was, where it was coming from? Based on Bloomberg?
It's basically coming from futures prices for they do it from OIS pricing. I can't remember what OIS stands for now. Overnight international swaps, I think. but basically it's a swap product, the pricing of that. Which is a similar kind of idea to looking at short sterling will tell you
Right, yeah.
basically the same thing. So yeah, it's where the market's implying that rates will be at a certain point in the future.
So could we? I mean, it's not possible to quickly check it now.
I'll get you up short sterling for May. L. There isn't a May contract. But there you go, that's June contract. So, sorry?
There's an increase in probably.
Yeah, because it's now saying that it's like 78 rather than this morning it was 71. You have a look at a chart. It's a thriller of a contract. That's the chart.
Nice, nice.
But you did get 28s down to 21s in one fast bang on the number. And you can see volume's gone up quite significantly now. We trade 15,000 lots before. We've now traded 400,000. So a lot got done on that. In fact, I'll put volume up and see how much you did in that minute. Still only 10,000 got done volume wise, and then it did a hell of a lot more just there and did 30,000 in the middle of it. So yeah, so you see how quickly a lot of this will disappear, because you say got 22,000 on the bid, it's moved it nearly 10 prices and it's only taken 10,000 lots to do it. So you can imagine what happens over the event. Everyone just pulls out of it. So it will go down to looking a bit more like that, and you'll have hundreds on each side, despite the fact people are trying to get away thousands and thousands. So yeah, pricing wise, we have sort of stepped a little bit closer to May. I know the Squawk said that it's 70% now, price for May. So yeah. Sorry, we've got a question. Where your stop would be on a breakout continuation, do you keep your stop where it was when adding after reducing the risk, or will you pick up higher low, let's say? For me, on a breakout continuation trade, when I buy it, if it doesn't go straight away, my stop is either below. If you've got a very small recent low, I'd put the stop there. Alternatively, it would be more a case of, if it doesn't go straight away, as soon as it starts dropping back below this trend, I'm going to give up on that. So it could be literally 2-3 ticks. I'm not looking for much. I'm not going to buy it on this break and put my stop all the way down here, just because the fact that by the time you're even halfway there, you're wrong. You know, it's not being a breakout type trade. Ongoing, it's then a case of it's a personal choice whether you either trail the stop higher. In this instance, with the moving average and trend line, I think it was a nice way to trail your stop. But if not, I would I'd end up trying to leave the stop down here. At least until you've created a new low, you don't want to move your stop. So you're going to have to see it come back towards you once before moving your stop up, if you're going to try and stay in like that. So yeah, that's Bank of England. I've not really got too much more to say on that, unless anyone's got any other questions. The next one will be more muted in terms of the information you get. You'll just get that smaller screen dump. You won't get all of the forecasts with it. The next one I think probably has now been opened up a little bit, because they've said somewhat greater and somewhat faster, effectively. They're going to have to give some clue at the next meeting. I think if they are going to raise in May, they'll make it quite explicit in the next meeting. Something along the lines of most or all members judge that rates may need to move sooner rather than later. Something along those lines. I think that's going to be the way that they'll do it at the next meeting. That's going to be the thing to watch out for. So they've set something up. If nothing else, they've set up a continuation of more activity at Bank of England meetings, which is a good thing. What you don't want is a central bank that goes, right, we've done this and that's it. We're not doing any more for the next however long. So they've set something up, so we should get quite a decent Bank of England. And also, bonuses, you guys will be here to trade that as well. So we'll have another bash at Bank of England in 6 weeks' time. So what's that take us to? Early to mid-March. So yeah, we'll have another go at it then. And that won't be the same week that we'll do Bank of England, Fed and ECB. No, sorry, Bank of Canada, Fed and ECB. So I think we get them all in 1 week. So you'll get Bank of Canada in the afternoon, Fed in the evening, and then ECB the next day. So a central bank sort of crazy couple of days, which will be highly entertaining. Hopefully give us quite a bit to talk about. Hopefully quite a bit to trade. ECB is the one there that in the past has been very, very good. Is unlikely this time to really give us too much to trade. But there you go. Right, we'll wrap it up there then. Give everyone a chance to have a bit of a trade for the afternoon. Have a look at how these things sort of continue onwards, whether that Bund's going to continue. I'm not quite so sure. Let's have a quick look at the profile. Bund's getting a little bit stretched. That's what worries me about it now. That we just, if you have a look at it on a profile point of view, whoops. Get rid of this one. Profile point of view, all the values still up here, VPOC's still up here. That for me looks like it's getting a little bit too stretched. And so you could now start to have a look for some kind of a reversal trade. Perhaps if we get a move above 40. So we've got this little block down here. This is a trade I know Nick likes, whereby we're sitting in this block. Yeah, we've got a slightly poor low at 26. But if we start getting above 39.40, I think that's when we'll sort of have a little bit of a sweep back up of everyone who's got short towards the lows gets pushed out of the trade. So that will change if Bund can shift value down towards the low. If we can shift value towards the low, then I think that situation will change. And I think then we can continue lower. So that's what we're watching out for in the afternoon. Other than that, equities seem reasonably stable. Don't look like they want to do too much. And the pound equally looks quite stable. It's looking like a pretty bearish candle in the pound now on the hourly.
T-Notes is trying to make a weekly low.
Oh, is it?
Which I thought was trying to play a golden short off that.
Ooh, let's get a T-Note chart up then. Oh yeah. Yeah, you got low down there at 17.5, 17's area.
Yeah. If you can push through that.
Yeah, if that goes.
Can drop like 56 or something.
Yeah, there's really not a great deal below that at all. Let's go and have a look. It's been a long, long time since we've been down there. 2019. Yeah, there we go. 120.10 might be an area that will get picked up. That was a low back in June 2015. Last time we got down to these lows. So yeah, I'd watch 120.10 in the T-Notes to the downside. Beyond that, you're into the 119s, 119.17. So yeah, some pretty far back levels that we've got going on there now. And interesting that bonds once again will not go up, despite the fact of equities sort of pretty weak showings of late. So pretty bad news in terms of bond markets. Right, we'll wrap that up. Guys online, if you do have any more questions, chuck them on the group. We continue to talk through what's been going on, what's trading this afternoon. So yeah, stay in touch, and all the best, guys, and I'll see you guys tomorrow morning. We'll do equities, we'll do bonds tomorrow, bash through that, and then next week we'll go more into sort of technical analysis and start giving you guys things to start looking at in terms of trading of certain chart patterns, certain just candlestick patterns, just candlesticks. So that'll be the plan for next week. All right, we'll wrap it up there. Have a good evening, guys online, and I will catch you all a little bit later. No, sorry, I won't catch you later. Nick will be on later at 4:45. All right, guys, see you in a bit.